Welcome. My name is Karen Newton, and I'm the founder of Karen Newton International. And we're a company that teaches people how to be investors. Now, quite often there's confusion about an investor because the first thing that comes to mind for most people is trading. And today I want to take a look at the differences between traders and investors. These words just get bandied together so much, and I just want to clarify that difference. You see, traders and investors have different mindsets, and those mindsets make a huge difference as to whether you make money or not. So by clarifying the difference between them, I hope you'll understand what I teach, how I can help you to become wealthier. So the first thing we want to look at with the difference between traders and investors is trends. Now, a trader needs a trend. If the trend is going up, then they come in down here and they get out here. Right, so they need that upward trend. Okay, or they need that downward trend because they can make money in downward markets as well. They can have a trade here and sell down here. Hope you can see that as a line. Whereas investors, they go totally contrary to the markets. So when those markets are going up, then investors are selling because they've made their money. It's time for them to get out. And the thing to understand is that there has to be a buyer for a seller, and that vice versa needs to be a seller for a buyer. And that's where investors come in. Because when the market's going down and people are wanting to sell and get out of something, it's the investors who are there buying. They see that as a sale, they see the discount on the products, and they are ready to get into that and buy that investment and then hold it until it starts to go up. So traders will need trends. Investors go contrary to what the market is doing. So they buy low, they sell high. They get in, they get out. Traders follow the trend. The next thing is the length of the trade. Because as a trader, a trade can be 1 minute. It can be 5 minutes. It can be 5 months. It could be slightly longer. But investors are in there for the long term. Investors work on a cycle. And you think of it, I'm trying to draw a circle for you. You think of it as a circle, okay? And we have a high at the top and we have a low at the bottom. And it's when it's down here in the low that investors are trying to buy. They want it at a discounted price. Okay, so they will come in here and they will wait, and they might wait 6 months for it to go up. They might wait 6 years. They might wait 36 years. I have investments that I've been holding for 25 years and they are still working their way up. So we're not in things for short term as investors. And I say we because I am an investor. Okay, so investors are in the market long term and they wait for that market to come to them. Now, trading is very much individual. Okay, because if you said to me, hey, Karen, do you think this is a good trade? Hey, guess what? You've just missed that opportunity. It comes and goes that fast. As an investor, I know I need teams. I build teams. I have teams of people around me that help my investments grow. They help me buy my investments. They help me sell my investments. They help me manage my investments. Okay, so investors are all about teams. And when we talk about teams, I need your support. If you could like and subscribe to this video and this channel, I would really appreciate it. Mindset. Now, mindset is, the difference there between traders and investors. It's like a huge gulf. You see, traders operate from two mindsets, one of fear and one of greed. Nothing wrong with either one of those. All it means is that as a trader, you have to understand, do you operate from fear or do you operate from greed? Because there are different strategies. And if you are a fear-orientated person and you use a greed strategy, you lose money, or vice versa. And traders will actually spend quite a lot of time with psychologists to understand how their mind works. Because the better they understand that, they understand the mindset they work from, the more money they will actually make. Us investors, we are laid back, we relax, we have a whole heap of patience because we know that we can't control the markets. All we can do is hold our investment and wait for those markets to go up. So we'll be there, just absolutely chilled out, just waiting for the right time to buy in or to sell. And what's the length of time you wait? Some people will say it could be a day, it could be a year, it could be 2 years, 5 years, who knows? So we're a lot more chilled. Doesn't mean we're not doing anything because we're always working on building our investments. It just means that we understand, hey, we've got to buy at a certain time, we have to sell at a certain time in this investment cycle, and we just wait until that happens. Now, if you are thinking of becoming a trader, you need to understand that statistics show that 90% of people lose 90% of their money in the first 90 days. All right, so you have to be prepared to lose money. You're not going to go out there and make money in every single trade. Nobody does. Even those top traders out there who've been practicing their skill for years will get 6 out of 10 trades. That means 40%, 4 out of 10 trades are going to lose money. So if you want to be a trader, you have to be prepared to lose money. Now, for us investors, we come into the market because we create those assets that the traders will trade on. Think Amazon. Jeff Bezos. If he didn't create Amazon, then there would be no shares to trade on. There would be, if Musk didn't come up with Tesla, there would be no shares to trade on. So investors are the creators. We create the businesses, we create the assets that allow traders to trade. So this is where that gulf gets wider and wider between traders and investors. Now, I want to make clear there is nothing wrong between being a trader or being an investor. It's just that we're all geared slightly differently. And if we wanted to trade and we're investors, we're going to lose money. And if we're investors and we decide to move that to trading, we're going to lose money. Okay, we have to understand where we come from within that trading or investor mindset. As I said, I'm an investor. I know I'm an investor. I create assets. That means I create businesses. I create the investments that the traders trade on. But I also understand that if I'm going to buy an asset or create that asset, then it's for the long term. It is not a short term. I know I have to be really patient and let that market come to me. So I hope you get that understanding of the difference between traders and investors, because what I'm teaching you on this channel is investing. And investors build businesses, they invest the profits into property, into digital assets such as shares and crypto, and into commodities such as gold and silver. Okay. So before you make a decision to do something, understand, are you a trader or are you an investor? Now, another clarification is that a lot of people say to me, what about Warren Buffett? He's an investor, he trades. Warren Buffett is an investor. He buys shares in companies, so he's buying an asset in a company. When you look at his wealth, he owns companies. He has his own company, and his own company is listed on the share market. So Warren Buffett is an investor. And if you look at the richest billionaires in the world, they are all investors. So I hope that clarifies things for you. Look forward to helping you build wealth, income, and lifestyle.